Hello guys, it's another Sunday and we are back with another ZeroLine analysis video. We're going to start the video by looking at the S&P 500, and it looks like the thesis that we had last week has played out. Last week we mentioned that we are seeing an overextension in the market according to what we see with the Bollinger Band, the price and the Bollinger Band relationship. So what we saw previously was price reached the upper band of the Bollinger Band and we had a pullback towards the short-term EMAs, and it looks like the same scenario is playing out again. Price went up towards the Bollinger Band, upper band, and looks like sellers have come in. We can see strong sell volume increasing in the market. It's not above average yet, but it's increasing slightly. Volatility has dropped. It's gone below average over the last few months or weeks. We had strong volatility in US equities from March to July. We had volatility that was above average, and now it has dipped below the average line again. So we are in a very low volatile condition, and August has been a pretty slow market trading wise as well, compared to the other months that we had. The markets move up and down, and you have to adapt with the volatility and with the speed of the market. You can't have the good months all the time in trading. It varies at this variance. The S&P 500 has reached the structure resistance at the moment, which is at 7,600, and it looks like it's heading towards the short-term EMAs, the 10 and 20 EMAs, and potentially if sellers become more dominant, we could go towards the middle band of the Bollinger Band, which we will call a fair value area, where buyers and sellers will become equal, and we could see consolidation in the markets. When you look at the long-term view of the S&P 500, we are well above the 200 EMA. So we haven't had a retest of this 200 EMA for a while. The last retest that we had, it wasn't really a retest, but it was close enough. It was in April 2025 after that massive retracement. We haven't had one of those in a very long time. So we need to be very cautious with US equities. We have to have tight risk management on every trade that we place, especially when I send a trade on ZeroLine on the Discord. Whenever it goes in our favor, we are always trailing stop losses to make sure when we do see a sudden market crash, which can come at any time, we just don't know, we are prepared for it. Stop losses are tight. So when we are hit, the full position doesn't get liquidated, only a partial of the position gets liquidated. Risk management is always number one with us in trading in general. Another interesting news that came out about 2 days ago was the news that the US Treasury is going to be buying back about 14 billion US bonds, 10-year, 20-year, 30-year bills every quarter. I'm going to link this Financial Times article in the description of the video. And it mentions that there's going to be buybacks of 14 billion in this current quarter, which is tiny compared to the debt that's outstanding. The debt is at the moment $40 trillion, which is huge, guys. $40 trillion. When you look at the number of 40 trillion, you just go crazy. How is that even possible? So the US is in big trouble, and buying back that tiny amount of bonds, it's not really going to do anything. The crypto market did react. Before we shall show you crypto, I'm going to show you the government bonds, the price, how it looks like. This is the US 30-year bond. This is on the weekly time frame, and it looks like we have reached a weekly low, last reached around 23rd of October 2023. So the last time the US Treasury bond 30-year bond was at this level was in October 2023. Sellers have been selling US bonds aggressively, and the short-term EMAs are still expanded to the downside. The bearish pressure is still in the market, and we have reached this 108 area. If you look at the volume, sellers have been clearly dominant, but we are starting to see some absorption in this area. So buyers are coming back in. If I go at the lower time frame, we should see some bullish candles forming. There we go. So that news gave the investors something to look at. And it looks like buyers are going to be slowly accumulating in this area here. So it's an area that we need to keep an eye on. And obviously the bond price and the bond yields have an inverse relationship. So when you go on the US 30 yields, obviously it's upside down and it's heading the moment. Just get rid of this. And when you do the monthly time frame, it has risen to very significant amount, nearly at 5.5%, and it's hit a hard resistance right now. So we could see some pressure being taken off by these announcements. So they are trying to intervene so that they can stop the yields from going higher, because when that happens, the US government borrowing costs become more expensive. So they have to really do something about it to keep the borrowing costs lower. And the US 10-year yield, very similar to the 30-year bonds, it is still looking more bearish than the 30-year. It's still heading towards this support area at 107. And if that support area doesn't hold, we could potentially go even lower to 105. And the 10-year yield as well, it is starting to head towards the 5% area. Okay, that's where the resistance is. And the EMA, the short-term EMAs on the monthly time frame are expanding as well on the bond yields. So the short-term EMAs are telling us that it's bullish, and there's still room to go higher. Because of that announcement, the crypto market, we're going to look at the crypto total market cap. The crypto market reacted strongly, bullishly. Investors saw that as an opportunity to put some money into crypto and start to position themselves early, just in case we do see more announcements like that and more interventions from the US government. When you look at the crypto market, obviously it's a risky asset. That's why when the bond yields fall, money moves towards more risky assets, like we've seen here. So there was an announcement that the bond yields are going to be falling because the US government is going to be buying bonds. Money got attracted back into risk assets such as crypto, such as Bitcoin. This is my crypto portfolio. When the crypto market pops off and we get liquidity flowing back in, we're going to be sending trades in the ZeroLine Discord as well. Right now, we're focused on serious sectors because crypto has been dead for the last few months. On the weekly time frame, we are still at the 200 EMA area. The last time we were at the 200 EMA area, it was in the bear market of 2022, 2023, where price expanded upwards away from the 200 EMA area. Looks like we're back into that area. So I feel like we're in an accumulation period. And if I draw a box around it, you will see it more clearly. It looks like a consolidation area inside this structure, this major structure, where we had the major run. We had the pullback. We had another run. It's like a blow off top. We had this blow off top. And then the real bear market began. And we're now back inside the 200 EMA, which is an attractive area for buyers to be accumulating again. It's a good margin of safety, as Warren Buffett says. I think we've covered the major assets for this week. I'm going to have a quick look at gold as well, because gold has been looking as well. So it looks like gold has also risen strongly. So it got pushed down recently towards this structure. And this is actually an area where I sent a chart on my LinkedIn and I said that this is a good area to start accumulating, and buyers took the opportunity. And I think central banks are buying like shit ton of the gold at the moment. So this was expected. I think we could see potential pullback again to give us another opportunity to buy, and then before it starts to go up again. But if the US government, the Federal Reserve, starts hiking rates, it could put some bearish pressure on gold as well. So keep that in mind. And the 200 EMA is creeping down here. And if you do get some hikes in the interest rates, we could see potential pullbacks again lower into this structure potentially. But at the moment, I don't see any bearish signs at the moment. It looks like a massive consolidation, maybe a distribution. We're not sure. So we will keep an eye on that. This week on our ZeroLine Discord, I sent a report on one of the stocks that I'm looking at, which we entered. It was DVN, which is an energy stock. And because of the conflict in the Middle East and the elevated oil prices, you could still see some money flowing into the energy markets because these companies are making a lot of profit from the elevated prices. So we can't ignore that. Once the earnings of those companies increase, we need to be looking at them and we need to position ourselves with where the money is flowing. One of the places that I saw a very interesting opportunity was in a stock called DVN. I posted the entry, the targets, and the stop loss. And when it was activated, I posted it again so that everyone's informed. All right. So it looks like we are seeing a cup and handle for me. So we got this cup, we got this handle. And look, this is the monthly time frame, by the way, guys. So we've had 2 bullish months. going into the stock. And it looks like it's ready to expand and go towards essentially the $80 resistance. We keep an eye on it. We got tight stop losses just in case. The energy market is a very spiky market. We need to be careful. We posted this a couple of days ago in our Discord, and it's been going pretty well. It's in profit already. Starting to move away from the 200 EMA. It's been hugging the 200 EMA, same as crypto, and it's starting to move away and expand away from the 200 EMA. Hopefully we see we are seeing rising volume in the stock on the monthly time frame, and volatility is about to break out. We're about to break out away from the average as well. So I see a lot of positives in this stock. And if you want to have a look at the research report, I posted it on my LinkedIn as well. We post everything faster on our Discord, and LinkedIn is usually a delay. So yeah, that's about it today, guys. Have a great week ahead. Have a great day, guys. Okay, take care.